Good morning and welcome. We're at the start of a power-packed week, and of course that includes the budget itself. But before that, you're watching Market Cafe on ET Now. I am Harsh Saita and with me is Ankita Saxena. Good morning, Ankita.
Good morning, Harsh.
But we'll start the week off with what happened last week. So let's allow Ankita to take us through what global markets have been up to through last week.
Well, Harsh, on Friday also the US markets continued their rally from Thursday. Now, on Friday also US markets rallied and capped off a winning week fueled by better than expected economic growth and pop in Tesla shares. Now, remember the Q4 GDP data had come out, which was better than expected, and also the weekless jobless claims were lower, which means a healthy economy and a strong and resilient labor market. Now, on the back of that, the shares rallied. Nasdaq Composite jumped 0.9%, while S&P 500 gained 0.25%. The Dow Jones Industrial Average added 28 points, largely flat, but in the positive. Now, all the major averages posted a positive week and are on pace for a month of gains, month that ends tomorrow. The tech-heavy Nasdaq rose 4.3% and closed out its fourth week of gains. It's on pace for its best monthly performance since July. Now, the S&P and the Dow added 2.4% and 1.8% respectively last week as of Friday. Now, Tesla shares rose 11% on Friday and more than 33% for the week after reporting a record revenue. Now, it marked its best weekly performance since May of 2013. European markets also closed marginally higher on Friday. The Pan-European Stock 600 index closed 0.3% higher. DAX was up 0.1%. FTSE was up marginally up, very flattish, 0.05%, and CAC was up again very flat, but in the green. So that was a roundup of US and European markets. Harsh, what are the cues coming in from crude oil?
Well, yes, Ankita, crude's at a very interesting juncture. We have this week, of course, the OPEC Plus meeting to decide on where the crude supply is going to be at. But crude fell, saw a bit of a decline, a bit of a dip at the end of last week, and that was on the back of a possibility of further Russian supply boost coming in the market, and that saw crude oil fall below the $80 a barrel mark. It's come just above the $80 a barrel at the moment, so it's just above that mark. Where Brent is concerned, Brent was just above $85 to close the week. It's inched up slightly higher. It's above the $87 a barrel mark at the moment. Those are the two things to really watch out for this week. One is, of course, Russian supply. The other piece is the OPEC Plus meet to decide on the overall supply in the market. But let's quickly take you through the events to watch, and I'll throw it back to Ankita for that.
Well, there are lots of events to watch out for this week, but as of today, we have Q3 earnings coming in from Sun Pharma. We have Tech Mahindra, the Adani Group, SBI that will be coming out with their Q3 earnings. And globally, we have, of course, the FOMC outcome that is also due this week. Another very important key inflation data point that we need to watch out for. We also have the union budget, of course, needless to say. We also have the Adani FPO that ends its subscription today. And we have the weekly expiry that's due on the 2nd of February.
Well, yes, Ankita, just small correction there. We have the Adani FPO ending tomorrow, actually. That's the third day of the Adani FPO. But very quickly speaking, we have the Fed meet, which is going to be the key, one of the key focus points. So Fed officials will be meeting on January 31st and 1st of February, and they're expected to raise interest rates by around 0.25% in Wednesday's policy decision. This year's first Fed meet will offer investors the crucial sign regarding the central bank's path forward on rate increases and, of course, the focus on growth. Fed officials from both sides of policy spectrum have recently sounded more optimistic about the central bank's chances of engineering a softer landing. Meanwhile, Moody's Analytics chief economist Mark Zandi said he expects the US to dodge a downturn, but acknowledged that it's a close call.
And China has basked in a festive hustle and bustle as people celebrated the Lunar New Year of the Rabbit with strong consumer sentiment. During the week-long holiday, which ended last Friday, sales Revenue of China's consumption-related sectors rose 12.2% from last year's Spring Festival holiday.
Bomb-carrying drones targeted an Iranian defense factory in the central city of Isfahan, and the Iranian defense minister offered no information on who it suspected carried out the attack. Last week, an attack on an Iranian cargo ship also escalated a year-long shadow war in Mideast waters. The Iranian government has been grappling with challenges both at home and abroad.
And floods ravaged Auckland is expected to receive further heavy rains over the coming days. Flash floods that have hit New Zealand's largest city since Friday, and a state of emergency remains in place in the city. Auckland Council also said that if the rain continues at this pace, there will be further flooding and landslides.
And Turkish President Erdogan signaled that Ankara may agree to Finland joining NATO ahead of Sweden. Sweden and Finland applied last year to joining NATO following Russia's invasion of Ukraine. Turkey and Hungary are yet to ratify the membership. Turkey suspended NATO talks with Sweden and Finland after a copy of the Quran was burnt at a protest in Stockholm last week. Welcome back. You're watching Market Cafe on ET Now. Let me quickly take you through, of course, the focus area this week. That's the budget. And as promised, we bring you the biggest voices from India Inc. and their demands and expectations from the upcoming budget. The Confederation of Indian Industries, or CII, and its top bosses sat down with my colleague Nayantara Rai to understand some of the recommendations they've made to the finance minister. And among the many recommendations include a lower IT slab, rates for up to incomes up to 20 lakh of rupees. What else is on their list? Listen in to find out.
This government continues to stay focused on all-round development, including economic development. And that's what we are hoping that this budget will also continue to further focus on. It's important in these times where we are in an uncertain external environment to continue to ensure macroeconomic stability in India. And that's where we believe that strong fiscal consolidation is required. The budget should adhere to our fiscal deficit target of 6.4% of GDP for this fiscal, gliding down to 6% in the next year and eventually to 4.5% by FY26.
The economy has recovered well, is resilient. I think prior to the pandemic itself, a lot of purposeful interventions made by the government, whether it's a corporate income tax rates, which makes it more conducive to investments. Banks are in much better state. So all of this is a positive movement. And we are starting to see the green shoots of investment visible at the moment. But I wouldn't say it is great. We're just seeing some start is being seen in chemicals, even in food and beverages, in metals, in capital expenditure related items.
And well, we have been bringing to you the budget wish lists from various sectors. Now, this time around, we managed to speak with Raj Kumar, the MD at LIC, who says that it is unlikely to see any further deductions under Section 80C. Now, he also reiterates the industry's demand for a composite license for insurance in the upcoming budget. Listen in to what he had to say.
Life insurance sector as a whole expect that the government may have a relook at the total deductions which are allowed under Section 80C, because these deductions, the limit was fixed many years back. Since then, the inflation has gone up, so one of the expectation is that this limit will go up. The other is the parity between the contributions made to NPS and annuity plans of life insurance companies. There is some demand that there has to be a parity because both of the products are of similar nature. These are the two basic things which life insurance industry is looking at.
Yes, sir. So one more thing I want to understand from you that government regulator is also looking for a composite license. So what are your views on composite license? How composite license will change overall life insurance sector?
Anuragji, it's not life insurance sector, it's the total insurance sector. You see, India is a very huge country. Even the life insurance benefits have not reached to all the working population. But if you look at the general insurance segment, the data suggests that there is a huge potential still available, which is untapped. So having a composite license will be exciting proposition for Life Insurance Corporation of India.
Well, yes, interesting conversation there. But this year's budget will focus on agriculture and agriculture's revolution over the next decade as well. ET now has learned from sources that the budget may announce incentives for new technologies and innovations, R&D, and for the agri-tech entrepreneurs to make farmer future ready. Prakash Priyadarshi, my colleague, has more details on this one.
Yes, agriculture sector may see some big announcement in upcoming budget. Government may make some announcements related to technology, R&D support and investment through PPP mode in agriculture sector. Incentives may be announced for new technology in agri sector, including PLI scheme for food and processing units. We are also given to understand that diversification of agriculture may be promoted in a mission mode. Sources are also informing that the amount under PM Kisan Saman Nidhi Yojana may be increased to rupees 8,000 from 6,000 per annum. Spending on rural infra like roads, houses, sanitation, water supply may be increased. Fund allocation under PM Awas Yojana rural may be increased to allocate remaining 85 lakh houses in rural areas. Financial support may be given to increase millet production and setting up of infrastructure going forward. Apart from that, fund allocation under Manrega scheme may be enhanced to rupees 1 lakh crore to increase demand in rural areas.
Now, well, the PSU stocks had a lot to do with the buzz around its exposure to Adani Group. Now, sources are telling a channel that SBI is likely to ask the company if the report was motivated and that they will discuss with the group as per procedure. Let me bring in my colleague Ankur Mishra to tell us more on this. Over to you, Ankur.
Yes, sources have informed us there will be a discussion with the Adani Group as far as SBI is concerned, but that will be completely procedural because they are a creditor to the group, and as per the news which has been floating around after the Heidenberg research has come out, they will check whether or not this kind of research was motivated or not. But again, sources have completely specified that this is as per procedure. There will be discussion and they will check with Adani as well. As far as the exposure to Adani Group is concerned, they have specified that it is completely under Reserve Bank of India's large exposure framework, and that limit has not breached by any manner. So that is completely under the limit of that large exposure framework. Apart from that, there is no concern as far as sources are telling us regarding the exposure to Adani Group, because the debt servicing has been proper, and recently there has not been any further loan which had been granted to Adani Group, and as far as new loans are concerned, if at all the application comes, that will be completely decided on the merit.
Well, thanks for that. Let me quickly take you through how Asian markets are doing. You can see the Nikkei up around 0.25%, but largely on a mixed note is where Asian markets have started this week. You can see the Shanghai up around 0.75% as well, but we're seeing slight declines on the ASX 200, the Kospi, as well as the Hang Seng. So across the board, we're seeing a largely mixed start to this week. The SGX Nifty, which was up nearly 50 points, is now absolutely flat. Largely just a slight positive bias is what it's currently showing. The Kospi is down almost 1% and the Hang Seng down over 0.5% in early trade. We're looking at US futures also slightly lower after a positive week. US futures, down anything roughly between 1/5 to 1/4%. So 0.25% lower is largely where we are seeing US futures at the moment. Quickly moving on, of course, the focus this week will be on that critical FOMC meeting, the budget as well domestically. So it's going to be a power-packed week, so currently markets looking cautious, at least to start off this Monday morning.
Cautious is the word coming in from Harsh. Now it's that time of the show where we get you all the stock-specific action, and for that we have Ashesha in the studio with us. Ashesha, tell us what are the stocks that we need to watch out for.
Hi, good morning. So first up, we will have Vedanta in focus. Remember, it reported its numbers on Friday post-market hours. Weak commodity prices led to weakness in numbers both on a sequential as well as on YOY basis, but the numbers have come well ahead of what the street was working with. Remember, the cherry on the cake is the dividend that they have announced. They have announced fourth interim dividend to the tune of 12.5 rupees per share, and the total dividend for FY23 now stands at 81 rupees per share, which is much above the total dividend that they had announced last year, which accounted to or total to about 45 rupees per share. Remember, they've also clarified with respect to their deal with Hindustan Zinc, which they believe will fructify as it is value accretive to both the parties. The funds received by this particular deal will be deployed based on its capital allocation policy. HFCL will also be in focus in today's trading session, and that is because they've gone ahead and informed the exchanges that the company, along with its material subsidiary HTL Limited, has received purchase orders aggregating to about 207 crore rupees for supply of optical fiber cables to one of the leading private telecom players of the country. NTPC, good numbers coming in over there, where revenue from operations stood at about 44,600 crores. An uptick of 34% is what we saw on a year-on-year basis. EBITDA margins meanwhile have contracted a tad bit. They've come in at 32.5% in the quarter gone by versus 33% that the company had reported same time last year. Apart from this, they've also declared a dividend of 4.25 rupees per share. BEL will also be in focus again on the back of its numbers, where revenue from operations are up 11% on a YOY basis. Profit after tax saw an uptick of about 3% on a year-on-year basis. Margins meanwhile stood at 20.5% versus 22.6% that the company reported same time last year. Zomato has clarified and said that 10-minute food delivery offering is not shutting down, but instead they are working on new menu with partners and rebranding its business. VRL Logistics and Vascon Engineers will also be in focus, and why is that? VRL Logistics board meeting to consider buyback is scheduled to happen today. Meanwhile, Vascon Engineers board meet to consider fundraise is scheduled to happen today. On the back of that, keep an eye out on all these counters today.
Well, thanks for that, Ashesha, but stay with us because we're going to dissect the Vedanta numbers actually. Vedanta has declared its Q3 numbers with a set that beats street estimates, if I can call it. Revenue and EBITDA both saw a decline on a sequential basis. Net profit was recorded 15% higher. So talk to us about those numbers, Ashesha.
Absolutely. As you mentioned, numbers were well ahead of what the street was working with. Of course, weakness in commodity prices led to weakness in numbers on a QOQ as well as on YOY basis. EBITDA improvement in aluminium, oil and gas and power was due to lower cost of production in both aluminium segment as well as power segment. Remember, the company has gone ahead and announced fourth interim dividend of 12.5 rupees per share, and now the total dividend for FY23 stands at 81 rupees per share. If we look at the numbers, revenues for the quarter gone by stood at 34,102 crores, down by 7% on a quarter-on-quarter basis. Margins meanwhile stood at 20.7%, down marginally by 28 basis points on a quarter-on-quarter basis. If we look at the fall in commodity prices, remember, aluminium prices declined by nearly 2% on a sequential basis. Crude and zinc prices were also down 9 and 7% respectively on a quarter-on-quarter basis. As far as the net debt position is concerned, it has deteriorated a tad bit on a sequential basis. Remember, net debt at the end of third quarter stood at about 38,000 crores, which is an uptick of 18.5% on a quarter-on-quarter basis. JP Morgan, meanwhile, has come out with a note on Vedanta where they're maintaining their overweight rating on the stock with a target price of 350 rupees per share. They say third quarter reported numbers did benefit from one-time gain that the company has reported. Underlying numbers, however, look muted. Focus on minority approval for the zinc sale remains a key to watch out for as far as Vedanta is concerned. They expect muted stock price performance in reaction to the kind of numbers that it has reported, and they believe that if LME prices sustain over the calendar year 23 prices, perhaps we could see an uptick as far as earnings estimates are concerned. But for now, they are maintaining that overweight rating with a target price of 350 rupees per share. So all in all, good set of numbers, much ahead what the street was working with, and Vedanta has also maintained its overweight rating.
Thank you for those details, Ashesha. Moving on to another set of Q3 earnings that are likely to come out today are for engineering and construction giant L&T. Now, while the street is hoping that the large orders will aid the order backlog, estimates suggest that it is likely to see a 15% jump in the revenues. Margins, however, may remain muted. Now, let me bring in my colleague Lisa Fernandez to tell us what to expect from L&T's Q3 earnings. Over to you, Lisa.
Well, Larsen & Toubro is expected to post a good set of numbers. Revenue growth is expected at around 15 to 16% on year-on-year basis, and that is on the back of a strong pickup on the execution front. Well, the pre-election finalization of multiple large order, that is also expected to aid the already strong order backlog. Talking about the core EPC segment, the revenue is expected to grow around 9 to 10% on year-on-year basis, and that is baking in the improved construction activity. On the margin front, improvement in margin is likely to be seen both on the year-on-year as well as on a sequential basis, and that is on the back of the cost rationalization measures undertaken by the company and also the moderation seen in the key commodity prices. Well, on the order inflow, that has been strong in Q3. They won order inflows of around 35,000 crore, and it was mainly significant large order deals concentrated in the high rail segment and also in the mining and metal segment. Well, the key factors to watch out for would be the outlook on capex, the traction in execution of orders, the risk on the export orders considering the rising issues on the global front, and also traction in new areas such as the green energy, the battery storage and other new age areas.
Well, thanks so much for that, Lisa. But Vamakshi is back and she's looking at all the brokerages that have been nice and substantial. They've made good observations this weekend, and Vamakshi's been going through all of that. Welcome back, Vamakshi. Take us through the brokerages.
Well, absolutely. Let's first start off with Interglobe Aviation. We have a report that has come in from JP Morgan, and they are expecting industry demand supply to result in a favorable yield. They're quite optimistic on the second half as well as medium-term spread discipline too. And in fact, they believe that the demand remains quite robust despite a higher yield. So overall, JP Morgan has gone ahead, maintained an overweight rating on Interglobe Aviation, and in fact, they've gone ahead and increased their target price to 2,350 per share. The next stock on our radar is Bajaj Finance. We have a note coming in from Jefferies, and they believe that the company reported a strong set of numbers in this quarter. In fact, they're targeting 25% CAGR over the next 5 years. Stronger core top line and efficiencies drove the earnings, strong earnings this quarter. Asset quality remains stable. They also have a strong growth outlook. So given all these factors, Jefferies has gone ahead and maintained a buy rating on Bajaj Finance. They've given a target price of 7,280 per share. And lastly, we will be focusing on the Indian materials pack. Morgan Stanley expects domestic demand to remain strong in 2023. In fact, they're favoring cement companies over steel companies. Ultratech remains their preferred pick, and that has been followed by Shree Cement as well as Dalmia Bharat. They've gone ahead, maintain an overweight call on Ultratech as well as Shree Cement. The target price for Ultratech is at 8,500, while that for Shree Cement is at 26,000 per share. Apart from that, they're also remaining underweight on Ambuja Cement and ACC Cement from the cement pack, as well as underweight on GSPL and JSW Steel from the steel pack.
Well, thank you so much for that, Vamakshi. Do keep an eye out on all the companies that she mentioned. Now, we have been bringing to you all the expectations for the budget, and now we have Sridhar Sivaram, who's the investment director at Inam Holdings, share his expectations from the union budget that's due on the 1st of February. Listen in to what he had to say.
If I connect the dots and listening to what Mr. Bajaj had to say and some of the other comments that we have seen, this is what I think may happen, that is basically talking of rationalizing the tenure for long term. So today, if you see, the long term capital gains for equity is 1 year, for real estate and REITs is 2 years, and for debt is 3 years. So you're really talking of rationalizing this. It's highly possible that everything moves to 3 years. Okay, so that's number one. The second is that the difference between a long term and short term is only 5%. So you're talking of 10% for long term and 15% for short term. That seems too less. It's highly possible that 15 goes up, maybe to 20, worst case to marginal tax, but we'll know in the budget. The other thing is that the government is looking at rationalizing all savings products which are tax-free today. So they've already, sort of plugged the loophole with capital gains, with say insurance in Europe. There are other insurance products which are tax-free. So what we hear is that is the other possible tinkering around which the government could do. We don't know how this plays out and what all come. If the worst case comes in everything, then that's bad. Which is why I said that some bit is already priced in, and some bit is not. So we will get to know more on the budget day.
Well, interesting insights there on the budget. That's going to be the focus domestically here.
Good news that's coming in. Indian women beat England by 7 wickets to be crowned winners of the inaugural Women's Under-19 T20 World Cup. Indian pacer Tita Sadhu was adjudged the player of the match.
Well, with that, we're completely out of time on this edition of Market Cafe. Of course, from Ankita, myself, and everyone who puts the show together, thanks for watching. But a very interesting lineup ahead of you on the market. Stay tuned.